what about this news of Walmart laying off hundreds of corporate jobs? What does that indicate in terms of the retail sector?
Yeah, well, Walmart was one of the major disappointments this earnings season. Not only did they miss earnings expectations, they also slashed their profit expectations for the rest of the year. So in a way, this was sort of well signaled in their second quarter's earnings report that they just wouldn't have the cash. So they are laying off 200 corporate executives in Arkansas. Again, I think this was signaled by their earnings report. But this is certainly a trend, you know, and I think Walmart was caught sort of flat-footed with consumer spending being pared back. And so they certainly indicated that this would be happening, and whether or not we're going to see this across the economy writ large, of course, is a big question.
All right, Lydia Moynihan, thank you as always.
In the latest quarter, nearly 100,000 employees disappeared from Amazon's global workforce, the biggest drop in the company's history, in fact. Prompts the question, what will future employment numbers look like as GDP declines? And DD's Colin Fredrickson has more.
The largest ever quarterly drop in employees in the history of Amazon. Almost 100,000 employees have disappeared from the company. And this is happening as the June unemployment rate remains at 3.6%.
We're going to see worsening unemployment numbers over the next several quarters.
Robert Wright is a senior faculty fellow at AIER and the author of Fearless, Wilma Sauce and America's Forgotten Investor Movement. Wright says,
employment is a lagging indicator, meaning the economy moves down first and then there's unemployment a bit later.
This is happening as jobless claims have hit an 8-month high.
With all those government spendings, all those projects, all those things, all those money that we pumped into the system, there are a lot of job opportunities, right? And that's why we are having a good time with employment. But that is likely to change.
Frank Xie is a business professor at the University of South Carolina, Aiken. Xie says it could change very quickly and that the technical recession could last around a year. The United States has gone through 34 recessions since 1857, and on average they last 17 months, though the 6 major recessions since 1980 have on average lasted less than 10 months. Colin Fredrickson, NTD News.
Though most sectors are struggling to fill positions, several tech companies are issuing hiring slowdowns and some layoffs.
KRON 4's Justin Campbell has more on how Silicon Valley is responding to the current state of the economy.
For the most part, what I've heard is that they're cutting either marketing or sales.
Ralph Aceves, CEO of HackerStrike, has been in the Bay Area tech industry for 40 years. He says tech companies can outsource financial services and marketing that are not core to their business, but will most likely not be laying off any engineers anytime soon.
You don't want to get to a point where you need to cut engineering, because as it is, it's very difficult to get good talent. So you want to protect those employees as much as you can.
The reports of layoffs at Oracle come as major tech companies continue to announce cuts. Google announcing last month they will slow hiring for the rest of the year. Tesla laid off 200 people. Aceves says as the U.S. economy battles inflation and interest rates go up, companies are trying to become more efficient.
Even 2 years ago, we did not anticipate the economic problems that we're facing now.
KRON 4 reached out to multiple people at Oracle, but they did not respond to our request for comment. Reporting in San Jose, Justin Campbell, KRON 4 News.
And fears of recession are already playing on the minds of many companies. We're talking about Robinhood, and that after suffering a fall of 44% in revenue, the retail trading platform of US, Robinhood, it will cut workforce by 23%. According to reports, layoffs will be concentrated in companies' operations, marketing and program management functions. US-based brokerage, it posted net revenue for second quarter ending June 30 of $318 million, as revenue from equity options and crypto trading more than halved. This compared with $565 million last year. Robinhood's total operating expenses for second quarter were up 22% on same period last year. Reorganization will cost the firm between $30 million to $40 million. The company has posted net loss of $295 million as well. Robinhood is one of many fintech startups that have started slashing jobs ahead of expected recession.
From the brewing to the bubbles, beer making facing a carbon dioxide crisis.
It put us in sort of like a emergency mode.
At Night Shift Brewing in Everett, they say their supplier is facing a CO2 shortage, something critical to the beer making process.
We might get something this week, but we might not.
The Mass Brewers Guild says the shortage is fueled by planned and unplanned maintenance shutdowns at several key ammonia plants. Also, a big natural source, the Jackson Dome area in Mississippi, is facing a contamination issue. Night Shift now outsourcing half of its production to other breweries with different suppliers. It means they may have to lay off about a dozen employees.
And we told them basically, we're going to run out of CO2. We need to shift a lot of our production to these other breweries. And at some point, probably in October, we're going to have some level of layoffs.
The Mass Brewers Guild says, I have heard from a dozen or so members that are on the hunt for CO2 or are being told that future deliveries are in jeopardy. We are working within our supply networks to try to make connections for our member breweries to see if they can get them some support until the supply chain steadies. Night Shift says it's continuing to churn out beer because it's contracting out.
Fans and consumers probably shouldn't see a huge disruption at all.
Night Shift does say that it will be paying out those affected employees to October 1st, offering severance packages as well, and helping them find new jobs in the business.
A bedrock of the Neenah community is laying off more than 100 of its workers. NBC 26's Olivia Acree looks at what the changes at Neenah Foundry mean for the surrounding community and its workforce.
All over the country, you can find pieces of Neenah, Wisconsin. All you have to do is look down. Neenah Foundry manufactures manhole covers and gratings that end up far beyond its factory walls. But at its core, the company has a long history in the city that shares its name.
The Neenah Foundry has an incredible history in the city of Neenah, 150 years of existence in the city of Neenah.
This week, the company filed a WARN notice that showed it will be laying off 115 employees in September. The majority are production workers, and it will be based on seniority.
Carl Dahlin explained that the company was not performing well in the Class A truck business and ultimately decided to sell that portion of the company. Part of the deal was that production could continue at Neenah Foundry for a year, but now that year is over and layoffs are what's next.
Some of that production is leaving, and as a result, our workforce needs are declining, and we announced the departure of the people.
The company will be providing some amount of post-employment pay and various levels of continued health care to those who are laid off.
This was always really part of the plan as we were sort of refocusing our business. So it should not be a surprise, and it does not reflect poorly on the nature of the future of Neenah Foundry.
Neenah Mayor Jane Lang says she's sympathetic to those losing their jobs.
We're saddened for the employees who have been given that notice, but at the same time we're optimistic for their opportunities going forward.
Mayor Lang hopes that those affected are able to move to a different job within the community.
In Neenah, Olivia Acree, NBC 26.
And let's begin with some data coming from US, whereas demand for workers eased in retail and construction sector. US job openings, they fell the most in just over 2 years in June. However, there is no change in general market conditions. That means Federal Reserve can continue raising interest rates there. Reports say at least 4.2 million workers voluntarily they quit their jobs in June, and layoffs were there. US job rate is important as it is considered by policymakers and economists as a measure of confidence in labor market. The high quit rate, it suggests that wage inflation is likely to persist for some time. Fed officials, they closely watch several metrics, and job postings are among some of them. Now, as a part of its war on inflation, the US Central Bank has raised interest rates, already sharply giving birth to fears of recession. Now, in a surprise move, US Central Bank last week raised key rates by additional 3/4 of percentage point by 225 basis point, 2.2%. It was making a total addition of around 2.2% since March, as we told you. The world's largest economy, US, has contracted by 1.3% in first half of the year.
Good afternoon.